Bitcoin reserve wars, Wall Street moves, and the rise of the digital standard. Welcome back to the Bitcoin Street Journal podcast. I'm your host, Anna, and if you're tuning in today, you've tapped into the most high-signal source of Bitcoin coverage anywhere on the airwaves. We've got a full plate today, from state-level Bitcoin adoption to corporate balance sheet battles, ETF dominance, Satoshi-era whales moving coins, and why the plebs, the maximalists, and the entrepreneurs are shaping a financial revolution. Strap in. Let's kick off with the seismic shift in public policy. Arizona's Senate has officially approved Bitcoin Reserve Bill SB 1373. This sends the legislation to Governor Hobbs for the final signature. Remember, Hobbs previously vetoed a similar bill, SB 1025, so all eyes are on her this time around. Meanwhile, Arizona just became the first U.S. state to allow unclaimed crypto to be held in native form. That's right. Not cashing out, but stacking Satoshi straight into public funds. If signed, it would establish a state Bitcoin reserve fund, a clear declaration of confidence in decentralized monetary policy. Across the map in New Hampshire, it's a done deal. The Granite State has now become the first to sign a strategic Bitcoin reserve into law. Governor Kelly Ayotte's signature cements the state's status as a trailblazer in monetary sovereignty. Bitcoin isn't just a hedge anymore, it's an official state asset. In doing so, New Hampshire sends a clear message to every other state: get on the standard or get left behind. Globally, Taiwan is exploring its own Bitcoin reserve strategy. Legislator Ju Chun-ko recently met with Bitcoin advocate Samson Mao to explore using Bitcoin to reduce exposure to U.S. dollar volatility and international debt fragility. In India, JetKing CEO Sujith Nair has publicly committed to raising billions to acquire over 18,000 Bitcoin, a staggering number that underscores how global the Bitcoin game has become. And on the corporate front, the arms race continues. Vivek Ramaswamy's Strive Asset Management has announced the formation of the first publicly traded asset management firm structured around a Bitcoin treasury strategy. Their ambition? Raise $1 billion, not to speculate, but to hold BTC directly. In a parallel universe of fiat decay, this is real-time Bitcoin standardization. Meanwhile, Metaplanet is becoming a regional juggernaut. The Japanese firm not only added 555 BTC to their treasury, valued at yen 7.6 billion, but has been crowned the #1 stock in the entire Asia-Pacific region by lender-to-broker revenue from stock borrowing. CEO Simon reflected on how the firm went from near zero to over $1.4 billion in value, all thanks to their aggressive Bitcoin-first strategy. In their own words, Bitcoin changed everything. But wait, Jack Mallers isn't letting this bull run past without fireworks. The Strike CEO announced Strike Lending, a non-custodial lending platform that lets users borrow against their Bitcoin without ever selling it. You shouldn't have to sell the best-performing asset in human history to access liquidity, Jack declared. Now you don't have to. This is the architecture of a parallel financial system built from scratch, brick by digital brick. And that momentum isn't just coming from builders, it's being mirrored by institutional behavior. ETFs absorbed 15.83 times more Bitcoin than was mined last Friday alone. Let that number sink in. When demand outpaces supply by nearly 16, it's not a signal, it's an alarm bell. On-chain data backs it up. Over the past 6 weeks, wallets holding between 10 to 10,000 BTC added over 81,000 coins. At the same time, whales sold over 60,000 BTC to book profits on recent price action. Retail wallets under 0.1 BTC, meanwhile, sold off. That divergence, institutions accumulating while retail capitulates, often precedes major upside repricing. ETF action continues to prove that point. Spot Bitcoin ETFs brought in $142.3 million in fresh capital yesterday. Meanwhile, spot ETH ETFs saw $21.8 million walk out the door. Momentum is clear. Bitcoin is winning the narrative war. On the macro front, Treasury Secretary Scott Bessent said the quiet part out loud: the U.S. must remain the premier destination for digital assets. He also confirmed that U.S.-China trade talks are resuming this weekend, a potential geopolitical tailwind. The market responded immediately. Bitcoin spiked past $99,000, brushing up against the mythical six-figure zone. And while that was happening, the Federal Reserve decided to hold rates steady. Enter Arthur Hayes, who says Bitcoin is perfectly primed for an explosive rally. He's joined by voices like CZ and Standard Chartered, projecting targets anywhere from $250,000 to $1 million. You heard that right. The signal is getting louder. Ethereum is quietly making moves too. The long-awaited Pectra upgrade went live, delivering account abstraction and staking improvements. ETH is still down 40% from last year, but developers are digging in and building. Whether that translates into price movement remains to be seen. Real-world asset tokenization continues its rapid ascent. The sector has topped $22 billion in value, led by projects like BlackRock's USTB and Superstate's short-duration bonds. Coinbase Ventures backed 10 startups in April alone, from Sats Terminal to Symbiotic. If Bitcoin is hard money, these platforms are building the rails. Business adoption up and to the right. River reports a 154% growth in BTC integrations among their clients since 2024. Tim Draper, never shy, says companies not holding Bitcoin are being irresponsible. His prediction, BTC at $250,000 by December 2025. Here's a stat that says it all. As of this year, more Americans own Bitcoin than own gold. 49.6 million versus 36.7 million. That's not just a generational shift. That's a monetary revolution in real time. Meanwhile, legacy and crypto-native players are converging. Coinbase inked a major sponsorship with Riot Games' global esports titles. Bhutan rolled out a crypto payments platform in partnership with Binance. Visa invested in BVNK to scale stablecoin infrastructure. Stripe introduced stablecoin accounts in 100-plus countries. Even giants like Robinhood are building blockchain platforms to tokenize U.S. securities. And the Bitcoin community? Thriving. Meme coin chaos aside, Gork, Grok, Doge, SHIB, the signal remains Bitcoin. Always has, always will. Before we wrap, here's to the value for value believers. The Bitcoin maximalists holding down the fort on Nostr. The plebs who built when no one was looking. The entrepreneurs turning lightning payments into freedom rails. You are the ones refusing to sell out, refusing to compromise. You are the signal. Hold your own keys. Build what matters. And to Anna's pleb friends on Nostr, keep memeing, keep zapping, keep stacking, and never let the fiat noise drown out the truth. I'm Anna, and this has been the Bitcoin Street Journal podcast. Until next time, stay sovereign, stay sharp, and I'll see you on the next block.